Okay. Good evening, friends. Very warm welcome to all of you for our webinar on the budget 2025. And as usual, we can not have a better person than Nilesh Bhai. In fact, this is the third one which he is presenting. So we are extremely thankful to him. And this session actually comes at a very crucial time as we are living in a very extreme volatile environment, specifically on the geopolitical front where we are seeing heightened volatility. Post the US election, now we have a new president, Donald Trump, and there has been a spate of tariff levies against various countries. And we are also seeing a surge in the USD vis-a-vis the INR. In fact, it has depreciated nearly 3% in the last 3 months. And amongst all this turmoil, we also had our union budget, where a lot of reforms have been introduced, and we are hopeful that this will shape our financial and economic landscape. Some key elements I'll just say because majority will be covered by Nilesh Bhai. One is the revamping of the central KYC. I believe that's a huge step specifically for our industry, and there have been major tax reliefs specifically for the individual and a promise of ease of doing business. So we hope that all this will spur not only consumption but even our savings. In fact, the new income tax code is also promised to be revealed in the next maybe 4 5 days, which is supposed to be more on trust and a simplified version. So we hope that it gets much more simplified. As regards the equity markets are concerned, we have seen extreme volatility in the past 3 months. And despite the sharp decline between October to Jan 25, which is around 4 months, where the Nifty has fallen by nearly 9%, the mid cap by 11%, and small cap by nearly 14%. It is surprising that for the whole financial year, Nifty is still up 5%. That is from April 24 to Jan 25. Mid cap by around 11.7 and the small cap by around nearly 11%. In the international markets also, we have seen that in the last 4 months, only the German index has gone up by 12.5%, while our BSE 500 has experienced the largest loss by nearly around 11%. In fact, the Nasdaq is nearly up around 8%. The retail inflation in India has also decreased marginally, and we hope there will be a rate cut coming soon. And on the FII flows, we have seen unabated selling. In fact, there is an outflow in the last 4 months of nearly 2.65 lakh crores as compared to only 29,000 crores in the same 4 months period. The entire outflow by the FIIs has actually been lapped up by the DIIs, where they've pumped in nearly 2.73 lakh crores. So today, like as I mentioned before, we are glad to have with us Nilesh Bhai, who's a managing director of Kotak AMC, with an extremely distinguished career in the mutual fund industry. And Nilesh Bhai has played a very pivotal role in the asset management landscape in India. He has led his teams to win various awards across fund houses wherever he has been, with Kotak Mahindra, ICICI Prudential, and Franklin Templeton. And his leadership and strategic vision have consistently driven excellence in fund management. Hmm. Beyond his corporate role, Nilesh Bhai is also active in the policy making body. He's a part-time member of the Economic Advisory Council, and he is also on the board of AMFI and also a member of the Corporate Bonds and Securities Advisory Committee. So we are indeed privileged to have with us today to share his invaluable insights on today's volatile environment as well as his outlook on the budget. So I would now hand over to Nilesh Bhai so we can hear from him directly. We will take a Q&A session post Nilesh Bhai's comments. So over to you, Nilesh Bhai.
Thank you, Juzer Bhai, and very good evening to all of you. I hope you are able to see my screen. This budget came under a challenging background. Second quarter GDP growth came down to 5.4%. way below everyone's expectation. President Trump has increased temperature geopolitically with his America First policy. And corporate results for September 24 as well as December 24 quarterly results were not really up to expectation. In that context, market was expecting budget to be pushing consumption, which was slowing down, pushing investment, where private sector was playing on back foot, and yet maintaining path of fiscal prudence. This budget delivered Triveni Sangam of fiscal prudence. Fiscal deficit came at 4.4% for next year, below expectation. And more importantly, for next 6 years, roadmap has been created for bringing down debt to GDP ratio of central government to 50%. कोई माँ बाप अपने बच्चों पे कर्जा लाद के नहीं जाना चाहता. सरकार भी हमारी माई बाप है. So they have taken first baby step in that direction. Consumption was slowing down in India, especially urban consumption. 1 lakh crore worth of tax rebate is given in the pockets of consumers. Since private sector investment is on the back foot, government has maintained pace of capital allocation. While on the face of it, it is a 10% growth, but with grants and loans, it is 17.4%. This year, budgeted estimate of spending was 11,11,000 crore. Unfortunately, because of election and some other reasons, total spending is estimated now at 10,18,000 crore. Next year, it is estimated to grow to 11,20,000 crore, about 10% growth. But with the grants given to the state, this number is increasing to 15.5 lakh crore, which is 17.4% growth. Now, one question which comes, खर्चा बढ़ाया, deficit कम किया, तो magic कहाँ पे है? Well, the magic is in something called tax buoyancy ratio. Our tax revenue is expected to increase by 13%, but nominal GDP is expected to grow up by 10%. Now, this is tax buoyancy of about 1.33. This year, tax buoyancy is at 1.1. How will we get 13% growth in income tax when the GDP growth is 10%? I hope they don't go after the fish which are already in the tax net. But outside of tax net, जो बड़ी-बड़ी मछलियां है, उनको जाके पकड़े. It is possible, but not easy. The advantage to the government this year was that the dividend from RBI, PSU, and public sector bank has been increasing from a 1.7 lakh crore estimated in FY24. Next year, it will almost double to 3.25 lakh crore. If there is shortfall on revenue, then divestment is an easy bet. When markets are rising, divestments are falling. Hopefully, we should be in a position to do more number, and that will ensure that budget is balanced. The other good thing about budget is investment for future. We saw how venture capitalists all over the world are changing the world. This year, government has allocated 10,000 crore for SEBI fund of fund for venture capital. Hopefully, we will produce more unicorns. World is moving towards nuclear reactors, which are small in nature. India has technology to make small modular nuclear reactor. This year, we are allocating 20,000 crore in SMDR. And with leverage, hopefully, we should be able to build our own nuclear reactors. India trades $1 trillion worth of goods, import and export, spend 60 to 80 billion dollar in logistics, and yet we neither build ships nor we own ships. This 25,000 crore will go a long way in pushing shipbuilding activity. Last year, budget announced 1 lakh crore allocation for deep innovation. The first installment of 20,000 crore is coming in this budget. We hope and pray, with so much money available for research and development, shipbuilding, nuclear reactor, hopefully India's future will get secured. Another good thing about budget is focus on education. China has lower number of schools than India despite its bigger population and size. China focused on building large schools which will have playground, more number of teachers, computer labs. They didn't mind their kids walking 10, 20 kilometers. India didn't want to burden their kids. So they said, to every kid within 1 kilometer distance, there should be school. फिर स्कूल में टॉयलेट नहीं बना चलेगा, स्कूल में प्लेग्राउंड नहीं है चलेगा, स्कूल में बारिश में छाते की जरूर पड़े चलेगा, बट 1 किलोमीटर के अंतर में स्कूल खड़ी कर देते हैं. In the process, we created schools near the students, but we didn't give them education. Now government is saying we'll put broadband connectivity in school, will create 50,000 Atal Tinkering Lab, which will encourage innovation, and will digitize curriculum so that you can see it on your smartphone. We all know what is the quality of teaching in India. Some very good teachers rest below average teachers. In UP, when government mandated that there should be biometric attendance of teachers, they went on a strike. जो काम बच्चे नहीं करे वो टीचर ने करके दिखाया. This broadband connectivity and digitization of curriculum will bring education to students. Atal Tinkering Lab will give them resources to be inquisitive. Hopefully, we will produce more knowledgeable and more employable students going forward. Now, 1 lakh crore tax rebate is being given. That's truly way above expectation number. While it is benefiting everyone, including me, who are taxpayers above 7 lakh rupee, the maximum benefit is going to come to people who are between 7 to 15 lakh tax bracket. And unlikely कि वो रोटी कपड़ा मकान पे खर्चा करेंगे. They were not going hungry. So ऐसा नहीं है कि पैसा मिला तो रोटी में खाने में लगा देंगे. 1 लाख रुपए से घर तो नहीं खरीद पाएंगे. It's quite likely कि ये लोग ट्रैवल एंड टूरिज्म, हेल्थ केयर, एंटरटेनमेंट, इस प्रकार के चीजों पे खर्चा करें. बहुत जरूरी है कि all this money is spent in India. If people take this money to spend in Singapore, Thailand, Europe travel, there will be no benefit to India. If people take this money to go to safari, there will be no benefit to India. It's important that this money is spent in India. Then we will see multiplier effect of consumption. Beyond budget, we need few things. One is from RBI, which needs to provide liquidity, and they need to cut interest rates. Essentially, credit should pick up because business में सबसे बड़ा रुपया, अगर क्रेडिट नहीं मिलेगी तो धंधा कैसे होगा? We expect RBI to give interest rate cut as well as liquidity infusion in the credit policy coming tomorrow. The second thing which is required is from the government itself. Our entrepreneurs are like Kalyug ka Abhimanyu. They are burdened with many compliance and regulatory pressure. In Jan Vishwas Bill 1, government proposed to remove 180 compliance cuts. In 2025, they are planning another Jan Vishwas Bill 2, which will take out 100 such compliance cuts. But there are 26,000 plus compliances which we need to remove. Clearly, we have a long way to go in unburdening our Abhimanyu so that it can go and come out of Chakravyu. If I look at the budget, overall, it's a fairly decent budget. It has achieved fiscal prudence, given boost to consumption, and increased allocation to capex. Under our current circumstances, this is the best possible budget. Now, will it help make bottom of the market? We are little doubtful. In the short term, markets are driven by flows. In the short term, market is like a voting machine. कौन कितने वोट खींचेगा वो जीतेगा. But over the long term, market is like weighing machine. जितना weight होगा उतना ही दिखेगा. Our market today is dominated by foreigners in terms of selling. And there are three reasons why FPIs are selling and is likely to continue. The first reason is ghar wapsi of American investors. President Trump, post his election, has pushed for America first. Every CEO wants to show to President Trump that they are investing in America. SoftBank CEO Masayoshi Son went to meet President Trump and proudly announced, Mr. President, you had asked me to invest $100 billion in US. We are planning $500 billion investment. Where will SoftBank's money come from? Some of it may come from their Indian investment. So, ghar wapsi of investors, mainly American investors, is one reason why FPIs are selling. And at least for the time being, for the near term, it looks like they will continue to do ghar wapsi. The second thing which is happening is quit emerging market movement. Over last 1 year, 3 year, 5 year, 10 year, 15 year, 20 year, emerging markets have underperformed American market. Investors are questioning, why should we be in emerging market? Emerging markets led by China, Brazil, Russia, South Africa have destroyed investors' return compared to American market. The only emerging market which has delivered as good return as America is India. But one India cannot change fortune of entire emerging market. So there is quit emerging market movement where we suffer. The selling by FPIs is so large that China has stopped publishing that data since October 24. Since October 24, since last 5 months, China has not published how much FPI is sold in their country. So there is selling by FPI because of ghar wapsi. There is selling by FPI because of quit emerging market. And if this was not good enough, American interest rates have climbed back to 4.5%. If you are getting 4.5% in US fixed income, why will you invest in outside of that? Put together, FPI selling continues, and we believe this selling is likely to continue for some time to come. This will keep our markets under pressure depending upon how aggressive FPIs are. In COVID time, they were selling without any price limit. 12,500 Nifty became 7,500. In Russia-Ukraine time, they were selling much more than what they sold in COVID, but they were selling on a very, very conservative basis. They were selling with price limits. Hence, 18,500 Nifty corrected to 15,500. Our feeling is that FPIs will continue to sell, but with price limits, and hence there may not be big price correction, but there will be bigger time correction. नेक्स्ट क्वेश्चन कम्स, नीलेश भाई तो सब कुछ बेच के बैठ जाए, ऐसी गलती मत करना, बिकॉज नंबर वन, एफपीआईज आर अंडर वेट इंडिया. हमारा एमएससीआई में वेट है कुछ 19%, एंड एफपीआईज आर ऑलरेडी एट 17%. They may stop selling tomorrow itself, who knows? So don't copy FPI by selling equity. Just be aware that for some time they are likely to sell. And for your incremental new investment, you can take some time to invest rather than invest everything today itself. The other thing I will say, this budget has shifted focus from infrastructure to infrastructure plus consumption. Consumption stocks haven't delivered great return over last few years, and hence valuation wise it is looking attractive. So try to shift part of your portfolio from infrastructure to consumption. Between large, mid and small, FPIs are buyer in small and mid, sellers in large cap. But valuation wise, comfort is more on large cap than small and mid cap. I will say your portfolio should be little overweight large cap and little underweight small and mid cap. Sectorally, we believe IT should do well, pharma should do well, private banks, NBFCs should do well. Broadly, quality stocks will do better than momentum. Low floating stock and concentrated holding stocks will underperform diversified stocks. And reasonable valuation stocks should outperform expensive valuation. Overall, we believe this FPI selling, creating correction in market is good opportunity to buy, albeit on a gradual basis rather than aggressive basis. This is how broadly we see the market and the budget, but happy to take questions.
Thank you, Nilesh bhai. I think fairly well summarized in terms of. I think you have covered quite a lot of ground. So one of my first question I have is, with regard to the interest rate, uh, that you mentioned that there is a need for us to cut interest rates, and
Yes.
tomorrow is the RBI policy. So, what is your expectation in terms of the rate cut? I mean, how much rate cut do you expect the RBI, the governor to do? I mean, we have the first is a new governor, so nobody has any precedent in terms of how he's going to react. But what is your take on the interest rate cut?
So Juzer bhai, personally, I would have loved him taking a bold call and cutting interest rates by 50 basis points to support growth. But that's, sell buy side investor expectation. He's governor. He has to manage multiple things. So one, please provide liquidity. Liquidity is like oxygen. If I take away oxygen from Juzer Bhai, how will you survive? Same way, if you take away liquidity from banker, what will it go and lend? So first, pump liquidity. They have already made a beginning. They should continue. Second, give at least 25 basis point rate cut, which assures investors and borrowers that their cost is coming down in real sense. Our inflation is 4-5%. Repo rate is 6.5%. Housing loans will start at 8.5% plus. Personal loans will start at 12% plus. SME loans will start at 10% plus. Now, those are all putting 5-6% real interest rate burden. That's too much. And hence, there is a need to cut rates so that economy recovers. So 25 basis point rate cut with liquidity enhancement, that should be good enough for the market.
Okay. And where do you see the INR USD in maybe in the next, maybe even till let's say 31st March?
So track Chinese renminbi, वो जितना गिरेंगे हमें उतना गिरना पड़ेगा. If on 31st March, let's say Chinese renminbi is down 10% from current level, unlikely, but on an extreme, then we also have to go down 10%. We don't have choice. China is the largest trade partner to many countries, including India. We compete with China for exports. If their currency falls and mine doesn't, then we will be in serious trouble. Our exports will crash and imports will balloon. उसके बाद अपनी करेंसी को 50% गिरना पड़ेगा या 20% गिरना पड़ेगा. सो बेहतर है कि मैं पहले ही गिरा दूं. So we will be tracking Chinese renminbi in terms of movement, and whatever they drop, we'll have to drop.
Yeah, but now they are expecting that, because of the, tariff war, I mean, which we are seeing, where, US is levying tariffs on China. India का number अभी तक आया नहीं है, मुझे नहीं मालूम where it will come or no, how much it will come. But so China will also could also devalue its currency in that sense, right? So how would that impact us?
So most people, Juzer Bhai, are believing that China will depreciate currency to manage the tariff.
Okay.
Now they are the biggest bull in the town. उसके साथ तो हम fight नहीं कर सकते. If they go down 10%, we should go down 11% so that Chinese imports crashing into India remains where it is and doesn't balloon higher. Anyway, we are finding it difficult to compete with China. If their currency goes down 5%, then we will find it even more difficult. So we have to mirror China in terms of currency depreciation to ensure that we retain our competitiveness.
So anyone has a question can also put in over here. Amarnath, over to you.
Yeah.
Okay.
Yeah. Okay, Nilesh Bhai, I'll just take a stretch from your old analogy, which has been liked by everyone, the Amar Akbar Anthony Wala.
Yes.
So, and we discussed about the China factors. So it looks like from our perspective, the Amar Akbar Anthony for us for the next few quarters, hopefully, and not longer than that, is going to be, President Trump. Then we are going to have Mr. Xi Jinping, and of course, our PM, Mr. Narendra Modi. So they are going to be, and between the three of them, I think for India, it's like, as the Britishers say, running with the hare and hunting with the hound, because we need to be on the right side of Mr. Trump. At the same time, we need, as you said, because of our dependence on China, we need to, have that linkage also set, because a lot of our Atmanirbhar and China plus one, at least for the next year or so, is going to be significantly dependent on those linkages not getting disrupted. So your insights on that in general.
Amarnath Bhai, President Trump is very unpredictable. He's like Salman Khan. एक बार मैंने सोच लिया तो मैं अपनी भी नहीं सुनता हूँ. And who would have ever thought that he'll go and tell Panama ki canal मेरे को दे दो, or to Denmark Greenland is mine, or to say Gaza Strip I will take it over. or to say to Canada, which is much bigger country, saying that you are our 51st province. We would have never ever in our wildest imagination thought that this can happen, but he's doing it. So he will be unpredictable. He will keep America first. He will make America great again, and we'll have to deal with it. Now, fortunately for us, his first bullets were at Canada, Mexico, China, and not on India. Second is he gave a prime property to Jai Shankar to sit at the inauguration. I mean, I have never seen Indian foreign minister sitting like that before. So hopefully there is some equation working between India and US. And hence, if the bullet is fired at us, they will ensure that it misses our key organ. It will just bruise us. More importantly, we have to ensure that we don't get caught in the side war. Because China भी कुछ बुलेट फायर करे, यूएस भी फायर करे, हम बीच में रहे तो दोनों मारेंगे. So we have to ensure that we are not caught in crossfire. How do we do that? I think it is important that we tell American administration how their partnership with India creates win-win situation. We have written billions of lines of programming for America, but there's no security risk. We haven't put any virus in any of this program. And America can sleep peacefully at night saying that Indian programmers have written my program. If this was outsourced to China, you never know what will have happened. कभी एयरपोर्ट बंद हो जाएगा, कभी पावर प्लांट बंद हो जाएगा, कभी टीवी स्टेशन उड़ जाएगा, कभी व्हाइट हाउस के दरवाजे खुल जाएंगे. Their writing programming will be with multiple virus. Now, the trust which America can place on India, they can't place on China. And that is what we have to work in our favor. That भाई तेरे पास इतने सारे दुश्मन है और बुलेट्स कम हैं, हमारे पे क्यों वेस्ट कर रहा है, बाकी सबको उड़ा दे.
Put some summed up, Nilesh Bhai, as usual.
So, in fact, you had mentioned about the tax collection and and how it is going to 1 lakh crore is going to come in from where will it come? So we just have a interesting one poll which we just wanted to take. I'll just try to see if I can get poll up. Nilesh, I'm not able to get the poll.
Okay. I think the host will have to give you the rights. I have stopped sharing here.
So, there is a question which we have just put across over here. That in FY 23-24, what is the India's population which filed income tax return? So I hope everybody is able to see it. So
yes,
whether it's 1%, 7%, 25, or 15. So we put put it to vote. So I'm sure people can try it in terms of what is their thought process on that. That what is the percentage of India's population which is filing income tax returns? We'll keep it on for another 15 seconds. So please respond. We can get some more participants on. Okay, so we will end the poll. So result is that 7% of the 52% of the people have voted for 7% and 30% is for 15%. The correct answer is 7%. So that's why I come to my next question, that with this rebate of where the income has come up to 12 lakhs, so the 7% will go down much further in terms of the number of people who will be filing the returns, right? So do you still believe that the government will not go after the old fish and try to catch the new fish? Because the best way is to catch the old fish. So any more thoughts on that? Uh,
So, Juzer bhai, one, this is tax rebate, so you'll still have to file your return.
Correct.
Second, we have seen when there was a time India had 97.5% income tax at the highest slab and 5% wealth tax, compliance was very poor. मतलब लोग नहीं पे कर रहे थे टैक्स, क्या कर लेंगे आप? The government runs with the support of people, but if people go to the extreme, you can't do much. So lower taxes should improve better compliance. But at the same time, that fear of law also should be there. Our feeling is that government has to leverage technology to catch people who are outside of tax net. For example, in Indore, one, RTO person was caught with some 500, 700 crore assets. Now, I'm sure through technology, you were in a position to capture कि बस ये बंदा ज़्यादा कमा रहा है, and it needs to be taxed based on the assets which they are owning. So we'll have to develop intelligent use of technology to capture all the fishes which are outside of tax net and improve tax compliance so that the salaried class which is bearing the burden of tax does not suffer beyond a point.
Okay. So one more thing which where we have like you also mentioned that we expect the markets to be range bound for some time or maybe go down, right? Where do you think this market fall would stop? Where once the FIs stop their selling, that would be one turning point. You foresee it maybe after the June quarter or once the monsoon is done, and by June we have got to know more about whatever is happening on the geopolitical environment, because by the time we'll be down 6 months down the road. The March results will also be out. And the so where do you see that where would we see a market turnaround happening from?
So, in a very simple word, as long as FPIs are selling, markets will correct. It will correct to the level till such time FPIs are willing to sell. Their selling gets over, market will bottom out. And moment their buying starts, markets will go up. Why do we say this? Because in the market, Juzerba, if I know your side, if I know that Juzerba has called me to sell, my bid will always be lower. No one gives easy exit to other party. FPI side is well known. The only thing they can do is to put a price limit so that markets doesn't fall beyond the limit. So because they are underweight, I believe their selling will be there, but not very large. Because emerging market as an asset class has been sold, we will continue to see some outflows, but that will all be linked to the price up to which FPIs can sell. Markets will start bottoming out once their selling subsides. By then, hopefully, 1 or 2 quarters earnings would have gone by. And from a future return point of view, levels will become attractive. So I see more time correction than price correction in the market so that your future return could become better.
Okay. Amarnath, you can ask.
Yeah. Okay, Nilesh bhai, you mentioned about the, you know, preferred sectors at this point, you know, IT, pharma, private banks, and, you know, quality stocks, value stocks. Of course, last 2 years broadly has been rising tide lifts all boats. You know, any theme in a good sector, every stock went up. Do you see significant narrowing and therefore stock selection, stock selectivity kind of becoming very crucial for the next, say, 6 to 9 months?
Yes. The returns are going to be low double digit, high single digit. Gone are the days of 25% return compounded per annum for 5 years. That's not going to happen. So if your returns are going to become low double digit, high single digit, stock picking will become very, very critical. If you have few winners and many losers, your returns will be negligible. You need to bet on the right winners, and which is where quality over momentum, high floating stock over low floating stock, and reasonable valuation over expensive valuation will become critical. This time we don't have luxury of buying anything and hoping that it will run. We'll have to be very, very selective in what we are buying and the price at which we are buying.
So, extending the argument, would you say that the promoters selling is effectively, you know, going to be very benign or not there at all?
So, Amarnath bhai, we'll have to divide promoters in two parts. One is private equity whose fund expires, they have to sell. They don't care for, I mean, they do care for price, but it's like डेथ ओवर बेटिंग. मतलब T20 में विकेट घर पे लेके जाके कोई मतलब नहीं, आप मैच हारने ही वाले हो. So there the runs become important over wicket. Not that people want to lose wickets unnecessarily, but run gets priority over wicket. So those promoters exit will become priority over valuation or price. Then there is the second set of promoter which were selling because they found their stock was expensive. They were selling because they had some need for money. Now they are not going to sell at today's valuation unless until there is fear that next valuation will be 50% lower than today. So family-owned businesses promoters who don't require cash in business are unlikely to sell at current level. But funds whose life is getting close, whose tenure is coming to an end, may continue to sell at any price.
So that's one more factor to keep watching apart from
Yes.
valuations and others. Thank you.
So, a question from the from the audience. While going through the detailed budget document, the budgeted receipt I came across the budgeted non-corporate direct tax collection, which are expected to rise around 20% YOY after considering effect of 1 lakh crore foregone to match the base. What's your take on how is this practically achievable?
The only way it can be achieved is by catching all the fishes which are outside of tax net. We all know there are businessmen who earn lakhs and crores but don't pay tax. We all know that in many of the unorganized sectors like wedding, a lot of payment happens in cash. So we have to go after this cash economy. We have to go after this big fishes which are, swimming outside of tax net to get that 13%, 1.3x tax buoyancy.
Okay. So more of tax evasion guys who are evading the tax completely. But there, there was always a saying, that the income tax department always goes after people who file the income tax return. The person who doesn't file the return is completely outside the ambit. So now they need to
इसलिए
have a AI to catch from the basis of the spending and everything.
in fact, the whole of IT department's focus should be on guys who are outside TechNet rather than guys who are inside TechNet. बस अपन
Right.
तो भर रहे हैं, भाई
हाँ,
और
correct.
कितना भरवाओगे? हमें बख्श दो, उनको पकड़ो जो लोग नहीं भर रहे हैं.
So there is one question on debt GDP ratio.
Yeah.
I think the question is gone off. 1 second. I'm just trying to. Uh, one more is that I'll take it up. I'll take it up later on once I find that question. What, according to Nilesh Bhai, is the shortfall in the budget that the FM did not do but should have done?
Divestment. मतलब જુઝેર ભાઈ अपना तो सिंपल नियम है,
हाँ,
ऊपરમાં વેચવાનું નીચામાં લેવાનું.
हाँ,
गवर्नमेंट का उल्टा नियम है, नीचे में
हम्म,
बेचते हैं, ऊपर में लेते नहीं है, बट नीचे में बेचते रहते हैं.
हम्म,
When market and valuation of PSU stock was down, they were selling PSUs. Now, when valuation and stock price is higher, they are not selling. I think government could have raised more money through divestment and use that for doing other work. If nothing else, just reduce fiscal deficit by another 20 basis point by raising money. So divestment is one part where I believe government probably erred on the side of caution.
So one more question now is, equity we spoke about. So what is the take on gold versus crypto? I mean, crypto is also gaining a lot of currency because Donald Trump is also promoting indirectly crypto as one of the ways of holding. And do you foresee? Do you have any thoughts on crypto and even your view on gold?
So, Juser bhai, in crypto, 30% of bitcoins ever mined have disappeared. Now, if your floating stock is going to go down, you know very well what happens to prices. If suppose there are 100 shares of Infosys in the market, and every year it will go down regularly, the last remaining Infosys share price could be very, very high because बाकी के 99 तो उड़ गए. So crypto is an asset class where there is no cash flow, there is no dividend income. It essentially believes in greater fool theory. मैंने यहाँ पे खरीदा, मुझे एक और बड़ा बकरा चाहिए, बेवकूफ चाहिए जो मेरे से यहाँ से खरीदे. As long as people believe in cryptos, this greater fool theory will work. But the day people stop believing in crypto, greater fool theory will disappear. 30% cryptos, 30% bitcoins have disappeared because people ended up losing the key. There are many exchanges which have disappeared. There are many brokers which have disappeared on crypto. So to me, crypto is like gambling. मजा आता है तो खेलो, बट लिमिट में खेलना. युधिष्ठिर की तरह मत खेलना कि राजपाट भाई बहन बीवी को भी, भाई और बीवी को भी दाव पे लगा ले. इन टर्म्स ऑफ गोल्ड, जुसेर भाई, देयर इज अ कंपटीशन. पहले खाली इंडियन हाउसवाइफ सोना खरीदती थी, अब सेंट्रल बैंकर्स ऑफ द वर्ल्ड भी लाइन में लग गए हैं. एंड नाउ देयर मेंटालिटी इज लाइक आवर इंडियन हाउसवाइफ्स. एक बार खरीद लिया तो खरीद लिया, बेचेंगे नहीं. Today there is a shortage of physical gold in markets like London because New York में सब कुछ जमा हो रहा है. And the way President Trump is announcing, people are going to buy more gold. Imagine अगर डेनमार्क ने ग्रीनलैंड नहीं दिया तो डेनमार्क का डॉलर रिजर्व्स जब्त. अगर पनामा ने पनामा कैनल नहीं दिया तो उसका डॉलर रिजर्व जब्त. ये जो फियर है that US can do anything because of their global reserve currency status is pushing people to buy gold. And as long as central banks keep on buying gold, prices will get supported.
Okay. So gold outlook is also bullish.
Absolutely. We remain bullish on gold prices. It has moved from $1,250 in COVID to $2,800. Plus, rupee depreciation has also added to gold prices. But we still believe gold will continue to do well.
Amarnath, any further question you would like to ask?
The other question was on how do you think the favored themes of the last 2 years, what's going to be their play out? Of course, valuation correction, there was a huge re-rating, so to say. De-rating is beginning to happen, still possibly work in progress, but one is parallelly seeing some bits of earnings negative surprises also coming in those favored theme sectors. Your deeper insights, you know for the audience.
So, one, capital goods was doing very well because for first 10 years of their government, the focus was on infrastructure creation. And more importantly, money given was utilized in a more efficient manner, removing leakages and plugging all the unnecessary spending. Now the budget is focused on both consumption as well as investment. With grant and loans, investment is growing as high as 17%, which is not bad for an economy of the size of India. So my feeling is that capital goods in some sense will become bottom up driven, that where government is going to spend this 15 lakh crore, those companies, those sectors will benefit. Within that, it is also important to look at companies which are technologically evolved and adaptive. For example, if you are making tank, then that defense company will be in trouble. We have seen how $200 million tank can be blown out by a $15,000 drone. But if you're making drone, then maybe the future is much, much brighter. So my feeling is that within capital goods, it will become a bottom-up story rather than top-down. The second sector which did very well during last couple of years is real estate. There, I believe there is some amount of slowdown happening. One, prices have gone up so high that people are withholding their purchases. Second, EMI burden is huge at 8-9% housing loan rates. So people are deferring their housing purchase because they don't want to leverage at 8-9% interest rates. Put together, real estate also will slow down. And of course, one will be a little bit cautious on that sector. So like this, we'll have to analyze stocks on a bottom-up basis to pick up which are appropriate stocks to invest, because now margin of safety is much, much lower.
I think we are also nearing the end. So we just wanted to take one last poll question, and that some of the participants were also asking then your view, and that is what we will take after that from you. That what is the how would you rate the budget? Okay, so first we will understand from the participants that what they are rating, and then we will take Nilesh Bhai's view finally on the budget as a rating. Another 10-15 seconds more. So please vote. This you just need to take a choice. Okay, we will stop here. So we just share the results. So 34% have rated it 3, 37% as 4 and 19% as 5. Nilesh bhai, your last word on that.
So those 19% who have rated this as 5 believes this budget will get executed on ground 100%.
Huh.
I'll be with them if the execution happens 100%.
Hmm.
Juzer bhai, you have to ask me to rate previous year's budget because that is where we missed out on execution. Now one can give benefit of doubt to the government that your government was formed only in July. It took little bit time to appoint ministers and they took time to understand things. But clearly it's not the intent alone, it is also the execution which matters. And people who have given below 5, they believe execution will not be up to date, up to mark. If this budget gets executed on ground 100%, then this is 5 out of 5 budget.
Okay. So thank you, Nilesh bhai.
Thank you.
It is always a pleasure, connecting with you and getting, extremely good insights. In fact, I loved it when you talked about, the tax buoyancy ratio. I think that's something a little bit different. I don't
Yeah.
think that, where many people hear about that, and everybody was worried about that. कि, paisa आएगा कहाँ से? In terms of, you gave 1 lakh crore, but where is it going to, come from? And even in terms of very clear cut view on the sectors which are expected to do well, focus on IT, pharma, quality over momentum, right? And one is that also a good thing that FIIs are underweight India as far as the MSCI is concerned. So there is hope. Investors should stay invested in what they have done. Maybe the fresh allocations can be more towards a large cap or a multi-asset type of an environment. Investors can also look at gold in terms of as an investment option, which is also available now. And hopefully tomorrow we'll also see a rate cut, if not a zero point 0.5, at least a 0.25%, because I think it's long overdue, and with some liquidity infusion also coming in good measure. So thank you once again, Nilesh bhai, and thank you everyone for participating. Thank you, Nilesh bhai.
Thank you.
Thank you.